Bank of Canada just made their first rate announcement of 2026, and Governor Macklem said something I've never heard a central banker say before. The days of open, rules-based trade with the United States are over. That's not me being dramatic. That's the Governor of the Bank of Canada on the record saying our relationship with the biggest trading partner has fundamentally changed. What does this mean for rates? Your mortgage. Let's break that down. All right, the headline: Bank of Canada held rates at 2.25%. No surprise there. This was expected. But here's what matters. After 9 rate cuts since June 2024, that's 275 basis points, the bank is saying we're done, at least for now. Macklem's exact words: elevated uncertainty makes it difficult to predict the timing or direction of the next change. Did he catch that? Or direction. He's really not even committing to the next move being down. Some economists, and I'll get to this, think the next move could actually be up. The bank also released their monetary policy report, basically their economic forecast, and it's not great. GDP growth for 2026, 1.1%. That's anemic. For context, the US is growing at 2.6%, and here's why. 1. US tariffs. The bank actually says the GDP is now 1.5% lower than it would have been without the trade war. Exports are down 4% since restrictions started. 2. The CUSMA review, and this is going to be the big one. Canada's trade agreement with the US and Mexico is up for review this year. Any country can pull out with just 6 months' notice. The bank is basically saying, we have no idea how this plays out. Really, it could be fine, or it could be catastrophic. 3. Population growth has collapsed from 3.3% in 2024 to basically 0 in 2026, and that's going to hit housing demand hard. But here's the silver lining. Inflation is right where they want it, 2.4%. Core inflation is actually trending below 2% on a 3-month basis. So we've got soft growth, controlled inflation, and massive uncertainty. And really, that's a direction for that's a recipe for holding steady and hoping nothing breaks. Here's where it gets interesting. The economists are almost unanimous. The cutting cycle is over. A Reuters poll found 75% expect rates to stay right here through all of 2026. But where they disagree is what comes next. RBC's Claire Fan says, we think the BoC is done with rate cuts and that the next change is more likely to be a hike. Scotiabank is even more aggressive. They're calling for 2 rate hikes in the second half of 2026. Now, not everyone agrees. CIBC still thinks the next move is probably a cut given the trade risks. But the consensus is clear. Really, we shouldn't expect lower rates anytime soon. March 18th is the next decision, and the market is pricing in another hold. All right, let's talk about what you can actually get right now. Fixed rates, 3-year, best I'm seeing, 3.79 to 3.84%. 5-year, if you're insured, you can get as low as 3.84% through broker channels. Conventional, 4.04 to 4.14. Big banks, TD and RBC, is around 4.29%. On a $600,000 mortgage, that's a lot of extra interest over 5 years. Variable rates, prime is 4.45%. Best discounts I'm seeing, prime minus 90, but some lenders are going as deep as prime minus 1.06. That's 3.39% on the best variable. So variable at 3.39 versus fixed at 3.84, it's a 45 basis point gap. Is it worth the risk? With economists split on whether the next move is up or down, it's really going to be a personal call. If CUSMA goes sideways, rates go either direction. Let me give you my honest take. The Bank of Canada is really in wait and see mode. They've done what they can. 9 cuts, 275 basis points. They've brought rates from 5% down to 2.25%. Now they're sitting on the bottom end of their neutral range, 2.25 to 3.25, and they're saying we're done, and we need to see how this trade situation plays out. For mortgage shoppers, here's the playbook. 1, don't expect dramatically lower rates. The cutting cycle really appears to be over. What you see now is probably what you're going to get for the next 6 to 12 months. 2, shop aggressively. The spread between the best and the worst is huge right now, 45 to 50 basis points, and that's real money. 3, watch the news if you can. CUSMA, tariffs, trade negotiations, these are going to move markets more than any economic data this year. That's your Bank of Canada breakdown. down for January 2026. Quick recap, rates held at 2.25% as expected. Cutting cycle appears to be over. Trade uncertainty, the big wild card. Best fixed rates 3.79 to 3.84. Best variable, especially in Ontario, prime minus 1.06. If you want to see what the best rate is for your specific situation, that's exactly what we do here at Everyrate. We shop 30 plus lenders and show you the results. Link is in that description. Subscribe and hit that bell if you want to see these updates every week. I'm Andy. This is Mortgage Rates Weekly, and we're going to catch you on the next one.